Money has the pulse on the next generation of investors right here, right now. This week, we're heading to Georgia Tech Student Foundation's Investment Committee. It is the largest wholly student-run endowment in the country. And the endowment, which started with a $100,000 donation in 1986, has now grown to more than $1 million. Here now on how they've done it, two Yellow Jacket and fund members, Abhijan Khosla and John LeBoutillier. Thanks to both of you for joining us. Your equity,
thanks for having us.
Terrific. Your equity investments are doing really well, up 46% versus the S&P up 25%. What's your best performing stock? What's your strategy? How did you do this?
Great. Well, unfortunately, our senior financial director, Michael Hudson, who's really the mastermind behind the portfolio, couldn't be on air with us. But we really have three main things that are helping us outperform.
Okay.
One of them is a decreased correlation to the S&P. We're really focused on finding stocks that aren't correlated to the broader market and generating some real alpha. Second thing that we're doing.
Wait, hang on. I mean, I got to ask you, the market has been going up. I mean, do you not believe that the market's going to continue to go up in general, the S&P, based on what the Fed is doing and based on the fundamentals in the economy?
Well, one of the things that we've really been looking to, we're overweight industrials right now, and we're really looking for companies that are adjusting their capital structures, taking on more long-term debt before the tapering of the quantitative easing program, really looking for companies that are looking at the macro view and adjusting accordingly.
Okay. And what's the rest of your strategy? Because I interrupted you in the middle there.
Well, the other thing that we've also been overweight on is consumer discretionary. So Under Armour has actually been one of our best performing stocks. They're up about 65% year to date. So even though the market's doing well, Under Armour has just been absolutely killing it. And the reason we really like this name is they're completely a play on consumer discretionary and the rebounding economy. We see the American consumer spending a little bit more. Under Armour's had 11 consecutive quarters of double-digit sales growth. So we really like that company. And based on our valuation style, we really like companies that have stable cash flows. And we see Under Armour as being a perfect example of that.
And that chart doesn't make you nervous? I mean, you look at that and it feels like maybe it's time to take profits.
Well, we definitely have thought about that, and we've pared back our holdings a little bit, but the thing we really like about Under Armour is they don't even have that much international exposure, and that market is huge. I mean, China and India, the middle class is growing like crazy over there, and Under Armour's done such a great job with their brand. We really see a lot of upside in the name, despite what it's had so far.
Okay. What else do you like right now?
Sure. So, tied to consumer discretionary spending, we really like MasterCard. If you can hold one business, you want to be in control of people spending money. You know, consumer spending is expected to increase 50% in the next decade, and 85% of all transactions are already estimated to be in cash. So there's huge growth potential for that market. Within the payment processing sector, MasterCard operates an open network structure, which really lets it take advantage of this global expansion in the payment.
You know, can I get your perspective on some of the other big stories of the day? Because you guys are right on top of it. You know, you probably heard us talking about Abercrombie in the last segment and saying how, I mean, they absolutely got hammered in the last quarter. It was the 7th straight quarter of decline. U.S. sales decreasing by 18%. The stock has been hit down almost 30% in the last 6 months. What do you think of Abercrombie? You think that's an opportunity or a disaster that's just going to keep tanking?
Well, that's a great question. I wouldn't go as far as to call it a disaster, but the fact that they can't sell their product is definitely concerning for us. You know, something that we have noticed with that name, and the thing that really stands out for us, is that Abercrombie and Hollister, their two largest brands, had, like you mentioned, double-digit losses in sales, but Abercrombie Kids only suffered 4%. So we see a little bit of an upside there, but the management is really going to have to take charge. You know, on the earnings call, they mentioned that they're having a hard time targeting women, and they're closing 40 to 50 Hollister stores. So even if they are successful targeting women and they change that strategy, we just don't know if they can recover.
Yeah, they do have naked guys in the store. That's what we're looking at now. Walmart. By the way, kids on campus, they like Abercrombie? I mean, is it still hot? We were saying how we're not their demo. What's your perspective? Because you are.
Sure. You know, I'll be honest. Abercrombie was very popular in high school. We see more, you know, Polo, Ralph Lauren, Brooks Brothers. That seems to be more popular. Oh, yeah,
because you guys are big time now. So why would you wear the Abercrombie? I hear you. Walmart getting killed in the press. I mean, just Ashton Kutcher is piling on them. They are just getting hammered left and right. What do you think of Walmart right now?
Well, the thing with Walmart is that they have been getting a lot of negative publicity, but their demographic is still sort of the low to middle end consumer, and the American recovery has been sort of slow. We haven't seen a huge rebound in this American recovery. So I think going into this sales period and going into the holiday shopping period, this is pivotal for Walmart. We're going to see how they perform, but right now we're kind of just, sitting on the sidelines and waiting to see what happens.
You guys are so smart. Can I ask you about Snapchat before we run out of time? So they turned down a $3 billion offer from Facebook. Crazy, insane. I mean, is it going to be worth more than that over time? What did you think of that decision, and what do you think of Snapchat?
Sure. So one of the difficult things with Snapchat, as with all of these tech startups, is determining a fair value. If you look at the number of users and the equity value per user, Facebook trades at about $100 per unique user per month. Twitter trades at about $120 per unique user per month. And while Snapchat has not publicly disclosed how many unique users per month they have, they would need to have about 272 million users per month to be trading about in line with Facebook and Twitter.
And do you think that they'll eventually get to that point? I mean, again, I think you're like right in the sweet spot of their demo here. Do you guys use it? Do people use it? Do you like it?
Sure, it's definitely popular on campus. But it's hard to say. Snapchat wasn't a thing at all a few years ago. Who's to say if that growth will continue? They don't really have a very unique business model. There's nothing really stopping Facebook or another competitor from coming in and building something pretty similar and getting people to use it as well.
You guys are awesome. Thank you so much for coming on. You are brilliant and fantastic, and we loved having you. Good luck to you. Although I don't think
Thank you so much for having us.
All right.